Hi there, Phil Rogers, Lauren Hall here from Loan Market Edge, coming to you with our second last wrap for the year. I know the people at home, I know what you're saying, I wish we could do more, I get it, I understand, but we may have a week or so off in the middle. But
we'll be back in 2022.
Second last one with Lauren talking maybe more. So a couple of things. Second last wrap. Yes, Christmas party season full swing, has not stopped. We've had some great catch up with some great people again this week. But big shout out to the Loan Market Queensland crew, which is all the brokers and corporate, or I guess who could make it on the day. It's been quite some time, I think, since we've all been together. So yeah, it was really nice and great to see. I was going to say the good energy from everyone, but I know it feels like it's been a big year. Maybe there was tired, but it was good energy to see everyone. Yeah, but no, it was a lot of fun and great to get everyone together. Good news around more cashbacks being extended this week as well. So the whole refinance, rebate, cashback offers that are in play. We've seen two probably big ones, a 3,000 and a 4,000 extended into the end of January. So if you haven't done that yet and you were thinking about it, you know what to do. Call us, we'll do the rest.
Hashtag free moolah.
Free moolah. Brokers work for you. There's like 1,000 hashtags. We fixed rates. Whilst all that is happening, fixed rates are still on the move again. We've seen another 5-10 banks this week move, 20 basis points, 30 basis points. It's like the new probably 2-year rate is about that 2.59. The 3-year is 2.99. Again, still not free moolah, but still cheap money compared to where we've been over previous years. But 3 months ago, context, there was 1.99, and 2.09 and things like that. So they are on the move, and those predictions again, maybe variables staying similar or maybe even going down, which they have been, which is great, but that fixed rate margin is being squeezed out. So if you haven't already done that, definitely, if it was on the cards, worth a conversation. But likewise, we're at 2.99 for a 3-year fixed. We're at 1.99 or 2.19 for a variable still. Yeah, so you've got to be asking the question, well, is fixing right for me? Is it the right thing to do? Again, call us, we'll do the rest and walk you through that. Thought making an offer, again, we've talked about this over the last few weeks, but as the timelines continue to move and this period of Christmas slots right in the middle, it does make it a little bit tricky, and we thought we might update a little bit about what that looks like. I'll let you talk.
Oh, here we go, I'm on.
Time.
Quick, here we go. One was around, the time frame. So if we're looking at today, counting out 14 days, very common traditional finance clause that's going to hit you right on New Year's Eve. Probably put $20 on the fact your solicitor will not be working, which means that there'd be no one there to actually advise on finance. So really important question before leading into the holidays, if you are going to be out shopping for property, touch base with your conveyancer/solicitor, ask them what dates are you finishing, when are you guys back, just so you can make sure that they're actually available for when you need them. If you want them to look over the contracts, that kind of stuff, you're going to need them accessible.
You will also, if you're trying to order a building and pest, if you need to get a valuation done, access to your solicitor, depending what the bank at the time, and getting documents. There's a flow-on effect, it's not just a one-party piece that's going to sort of trouble you potentially during that period. There's a number of things that need to happen and line up. So I would be definitely getting on the phone and trying to understand that. And look, most agents are fairly understanding of this now, especially where we are now, that, hey, there's going to need to be a little bit of time there, but they're really understanding those back to work dates is going to be incredibly important. And we posted something on the socials this week. I thought I'd just quickly touch.
Sorry, I couldn't hold it. I was trying. I couldn't do it.
We posted on the socials this week, Robot Economist, our name of
Nerida Conisbee.
Yes, I didn't get that right before. So Nerida, just with the top 7 predictions. So it's a quick 3-4 minute video, definitely worth jumping on and having a look at. But I thought I would just run through those quickly, the 7 top predictions they had for 2022, which is all really interesting and all very positive. Talked about number 1 being price growth. Number 2, that regional shift to continue. We've seen a lot of that, definitely with this COVID move. 3, the northern migration, southeast Queensland being the place to be in 2022. We're seeing a lot of the Mexicans coming over the border, but family and friends joining us here in the Sunshine State to lap up.
We're so grateful for
yes, that we are very excited to have them here. The number 4, the high level of demand for luxury properties, which I think is a really interesting one, and I think that a lot of that probably does come off the back of that migration. Value for money, bang for buck, what you would get for $1 million in, even if you use the figure of $1 million, but you say luxury is probably the 3-4 mil plus what you would get in Melbourne or Sydney for that money compared to what you get here on the coast, is chalk and cheese. So really exciting to see those people coming over and spending that sort of money, and then saying that will definitely continue. CBD revitalisation was number 5. Obviously hardest hit was probably those areas during COVID, and we did see a max exodus somewhat of those areas a little bit, but as we return to work and things get back to normal, a big push back into the CBD is likely. Number 6, talking about rentals will increase, the price of, the pressure on a lot of these people moving interstate as well. A lot of those folks maybe not necessarily buying. So there is a shortage of stock as it is at the moment with rentals. So they're saying that that's more than likely going to increase and continue to put some pressure around that. And number 7, which I think is really relevant one we talked about a bit, was about, and he is hoping, build costs to moderate in the second half of the year, and definitely anyone that's had anything to do with building over the last sort of 6 to 12 months, the increase on steel and timber and access to getting supplies has put, we're seeing 8, 15, 25% increases in that area, which has become unsustainable, if that's the right use of words, but they're very tricky to get through for these guys, for both the builder and the land and the buyer, and there's just a flow-on effect. So he is hoping that prediction is correct and that does start to moderate, because it will make that a lot more affordable for the consumer and yourselves, the buyer in particular. And I guess a big shout out to the construction industry that's trying to get through this as well, and has had to wear a lot of that as well. So I think it's not just the consumer, you've got to think about every person in that line. So he is hoping that those 7 predictions are on point. It's all good news. There's nothing in there. That's all we are. We're good news brokers. We never have bad news. That's why I talk.
Well, I was going to say, if there is, you delegate it to me.
Correct.
And that video is on our social. So if you want to jump on and have a look at the full video, it is really good. If you've got a bit of downtime over the holiday break and you want to know what is the market going to do in 2022.
Yes. And if you're not already following us, you should be. Yes. Facebook.
Probably not watching this
Instagram, LinkedIn, YouTube, get amongst it. Yes, second last one for the year. We look forward to seeing you guys next week for our final sign off. And in the meantime, have a great weekend, and we'll see you soon.
Bye.
Bye.